Welcome to Breaking Banks. Welcome back to Breaking Banks. I'm your host, Brett King. This week, we're going to dive into the changing elements of world payments. Now, I know there's a lot going on in respect to the Ukraine conflict and sanctions and so forth. That's not the objective of this show. We have another segment coming up for that. We're really looking at some of the global trends in terms of payments behavior. And to assist us on this, we've invited Jim Johnson onto the show. Jim is the president, Merchant Solutions, WorldPay. As you know, WorldPay is an FIS business, and FIS is a sponsor and partner of Breaking Banks. They've just released their annual global payments report, and we are going to jump into that. It's actually the 7th annual global payments report in the payment space. I'm sure if you're in that space, you've heard of this report because it is sort of considered, one of the mainstays in the space. And it's going through the process of release right now. So Jim, welcome to Breaking Banks.
Hey, great to be here. Thanks for having me.
Now, your team runs this report. Can you tell me, how long does it take to sort of put this together? I mean, this report in itself is 156 pages, which is pretty impressive. But is this take most of the year to put together, or is it compressed into a shorter time frame?
It's a year-long process, right? Kind of as soon as we issue the report, we start on the next year. As you'd mentioned, it's year 7. And really, we examine the goal of the report is really diving into current and a projection of future payment trends across 41 countries. So we're interviewing and surveying 45,000 consumers across the 41 countries. We're kind of combining that with 40 billion merchant transactions we have processed internally here, across 300 different payment types, 146 countries, 126 currencies. So kind of putting that all together in an analytics model. First third of the year kind of takes the interviewing, the data collecting. Then you go through a third of the year synthesizing it with our own data. Then you start putting observations together, and then you start fine tuning. By the time you're done, a year's passed. So I think you're spot on with your timeline.
Absolutely. So, obviously a lot is happening in the payment space right now, even before, we factor in the recent troubles in Ukraine. This trend, really the biggest changes we've seen in payments activity as a result of the pandemic. And of course, this is really the first report that gives us a glimpse into how those couple of years of the pandemic really affected the world of payments. On a global basis, what stands out to you as the clear trends that emerged over the period of the pandemic?
Yeah, probably no surprise to anybody. E-commerce is clearly been the dominant player. It's showing no signs of slowing down. Going to continue to keep pressing forward, at least through 2025, when our study kind of looks out to that horizon. Additionally, consumer payment preferences begin to shift a little bit. You've mentioned in your opening, buy now, pay later. While it's starting from a smaller transaction base, it's projected to continue to be the world's fastest growing payment method. One surprising thing coming out of the pandemic is the point of sale is making a strong comeback, right? But when people are transacting at the point of sale, they're kind of choosing digital form factor, right? Their phone predominantly over a plastic or cash. And then, lastly, buy now, pay later that we mentioned before, it's not just an online phenomena. during the pandemic, a lot of merchants upgraded their hardware. They're now able to kind of present, procure, and deliver buy now, pay later at the point of sale. Particularly, in Europe, Australia, they've been the big early adopters of that. But North America is starting to move pretty well on that front as well. I'd say those are the big things. The only other thing that I might mention is there's so much innovation, technology, changes to the supply chain. Fintechs and regulators really need to collaborate, right? There's this rapid shift. We need to just make sure we have frameworks in place where we can continue to govern our ecosystem well.
Absolutely. In respect to buy now, pay later, specifically, is there any discernible impact to credit card utilization that's evident in the take up of buy now, pay later as yet?
What I would say is there's not a big change, right? During the pandemic, credit got hit pretty good there, but as we recover, we're seeing on our front recovery to pre-pandemic levels. Now, to date, we're talking during the pandemic, buy now, pay later went from 1%, of global, volume to 3.5% during that time. So that you're not talking about a big base. And oftentimes, with whether it's Klarna, Affirm, Afterpay, you name the player, a lot of times credits tied into that to a degree too. So it's an interesting parallel. But to date, we haven't seen credit take a big hit.
One of the things that I was interested in the report is, we've talked about this a lot on the show, is the incredible growth behind the Chinese mobile payments schemes, Alipay and Tencent WeChat Pay. Now, that's clearly evident in terms of e-commerce payment methodology. The report shows that digital mobile wallets now account for 49% of e-commerce payment methods. You expect that to go to 53% in 2025. If we combine credit card and debit cards and prepaid cards, we're talking about 35% in comparison for e-commerce. But on a POS basis, you still see credit cards and debit cards, plastic, beating out digital mobile wallets. But by 2025, it's going to be pretty neck and neck, according to the report. In terms of this trend globally, the move to mobile wallets, you're obviously going to talk about the metaverse and the impact of wallets and crypto in a few moments. But in terms of that broader trend, how well do you think the industry is prepared for this modality shift? That you've talked about, moving away from plastic to mobile.
Yeah, I think it's it's in good shape, right? With the Apple Wallet that kind of, I don't know, came out several years back. I think the industry's slowly been moving there. I think during the pandemic, whether it was just turning kind of the feature on the point of sale or changing out what was going on there, combined with the safety risks on the consumer side of truly being contactless, I think adoption went heavy. I think you're going to see, and you're already starting to see, I think people are getting comfortable with it, right? And I think what's taken place in Asia, I think additionally, if you look globally, Brett, there's a lot of capability around QR code, right? So people who have who have a phone and traditionally have only been able to kind of maybe transact online, the ability in store to kind of read QR code is giving a lot more consumers more access than they had before. So I think we're pretty well suited. Obviously, our fraud capabilities have been there, from the beginning, really truly being kind of driven by a lot of the mandate and work the big brands have put place around their global rails. So I think we're in good shape. I think you're going to continue to see the mobile wallet become more prevalent at the physical point of sale. And, 2025 and beyond, we probably don't look a whole lot different than Asia.
I think you're right. In terms of that shift, we just explored it a little bit, but obviously during the pandemic, e-com ballooned, and use of wallets attached to that. Obviously, there was some correlation. But in respect to this return to the store, you do focus on this in the report. But it's also fairly clear from the report, and I'll get your perspective on this, that we're not going back to normal either. The return to the store, while there has been an uptick in POS transactions, certainly there's a behavioral shift that's fairly clear to more online, and digital engagement. Would you say that's a fair interpretation of the report?
Yeah, 100%, right? I will tell you the return to the point of sale was more drastic than I thought, but I honestly think it was probably driven pretty heavily through some supply chain headwinds, right? Whether it was Christmas time and I'm trying to buy my wife an iPad or whatever it might be, and online it tells me I'm going to get it in March. And that's just not going to do. So I get in my car and head out to a retail outlet to try to buy it, right? I think there's a lot of that probably factored into it. Secondly, I think the technology that advanced during the COVID period related to omni-channel, so the ability to kind of order ahead, do curbside pickup, etc. That capability got people, they might have done part of the transaction at home and finished it in the store, right? So that's a situation where you're coming back, but it doesn't look the same, right? And so I think there's a lot of different things. I think people, quite honestly, people went back to the grocery store, right? I don't know if Uber Eats wasn't getting their order right or not, but we saw, coming out of the pandemic, a lot of people going back into the store, not doing everything. I'll tell you, my wife is still doing all her shopping here at home related to the groceries, and that's just fine with me. But I think there's no set answer. What we do know is people came back to the point of sale pretty heavily, but they did come back differently. And I think that was accelerated a bit due to some of the supply chain stuff.
Now, I did notice that Asia features heavily in respect to the mobile wallet stuff. You show currently, in terms of e-commerce method, that about 70% of e-commerce transactions, 69% to be exact, are digital mobile wallet, 72% projected in 2025. Which is a fairly small increase given the traction we've already seen. And credit cards and debit cards just total around 20% there, in Asia. So obviously Asia is leading the charge in terms of this mobile wallet ecosystem. From that perspective, do you see that Asia has some significant advantages in terms of the payments infrastructure now because of their mobile wallet readiness?
No, I don't think it's an advantage. I think it's cultural, right? They just drove to that methodology very early. They drove that type of thinking at the point of sale. I think their Alipay and WeChat Pay kind of infrastructure drove a lot of that as well. And I think, as you see, Google, Apple, the big players on our side starting to dive into payments, I think you're going to see similar aggressive cultural shifts in us using technology to make payments.
What do you think about the in terms of merchant response to digital wallets globally? The wallets infrastructure we talk about in China, in particular, and Alipay and Tencent WeChat Pay, not so much for Paytm, which in India, which has a different model, but Alipay and Tencent WeChat Pay have significantly lower Rails fees. Do you see that as part of the reason for higher adoption of mobile wallets in Asia?
It's a great question. Well, I think mobile wallets, it takes a seminal event to change consumer behavior, right? You have to give the consumer a reason to use that mobile wallet rather than their plastic. And I think the pandemic did it. And it did it not just at the point of sale, it did it on e-commerce as well. At the point of sale, obviously, a new motivation emerged in the form of safety, right? Health, right? I don't want to touch things, right? But on the e-commerce side, you're now sitting at home doing more transactions. And where before you might have been doing a couple of transactions a week, a little friction didn't bother you. But when you start doing multiple transactions a day, your tolerance for friction in the transaction process goes away. And so for me, if a merchant's not accepting Apple Pay or whatever wallet I have, I'm not shopping there online, right? And so I think those two things were what it took in the United States for people to kind of start to change their behavior. And as we know, it takes 60 days to create a habit, and we've created habits, right? We had 720 days.
No, I do see that, on page 31 of the report, you do say, the big call out is that digital wallets will take the lead over credit cards in the US in 2022, this year. That is a big cultural change in the United States.
It's huge. It's these wallets were going nowhere pre-pandemic. They just weren't. You couldn't use them anywhere. And even online, people were preferring to type in their credit card numbers and, go the long route.
So let's jump into crypto and CBDC. We were watching with great interest as China they let the CBDC out for a run during the Beijing Olympics. So locals were able to, local athletes and some foreign athletes, of course, some opted not to use the ECMY wallet for the Olympics, but we did. So we saw for the first time the trial of the CBDC wallets. Obviously, right now, there's a bit of a return to crypto. We had a bit of a crypto crash earlier, but crypto still performed very strongly during the pandemic generally, and we're seeing right now a resurgence in interest in crypto. So, given that, explain how sort of the move to digital wallets is also critical for crypto custody and CBDC implementation and things like this in this emerging sort of 21st century digital payments landscape.
Yeah, and admittedly, I'm kind of learning every day, getting my arms around this. What I'll tell you is, at my company, we've kind of been in the crypto space here 8 years or so. Started with Coinbase, but we the transactions we perform today are turning fiat into crypto assets on the wallet, right? So buying crypto with a card. Now, as you start getting into central bank digital currencies and actually an evolution into buying with crypto, I think what you'll see is that these big wallets kind of offer a medium to kind of start governing this activity and creating some consistency and evolution of the playing field. I don't know how exactly that will play out, but I think those concepts are important. Much like the big brands kind of created the environment back in the day, right? On what was acceptable on the rails and not acceptable on the rails. I think you're probably gonna see a similar type evolution. I don't know if that's a great comparison or compare and contrast, but I think at least it gives you an idea how I see things evolving here a bit.
From a crypto custody perspective, we just saw NYDIG take in $1 billion of funding in December. That's sort of the biggest crypto custody deal globally right now. Is this something that WorldPay, based on what we've seen in the report, is increasingly interested in? I know you guys also have a partnership with NYDIG, but on a global basis, is this something you're watching, the crypto custody space?
Yeah, I think we'll partner as technology providers to customers who are going to take custody, right? I don't think we're going to be a custody player.
I think that makes sense. Yeah.
Yeah.
You guys tend to be agnostic as to the
Correct.
The value store
Correct.
Ecosystem, right? You're just looking at the rails. In terms of the CBDC side of things, the US has been fairly slow on this. The EU has obviously a CBDC trial going on now. We've seen Bank of Thailand and a bunch of other others announce their intention to roll out CBDC trials. But in the US, it's been a bit slower. We just saw the Fed put out a report, 2 weeks ago. The industry's response to that report has been fairly poor. The commentators in the CBDC space have said it was fairly unsophisticated. So it looks like the US is some, time away from really adopting that. But how does a CBDC or a digital fiat play into the mix of emerging payment systems, do you think?
Yeah, I think, quite honestly, I think it's coming. Number one, I think kind of the volatility going on in the world, that's probably going to impact it a bit. But I think it's absolutely going to be another payment type, another rail, so to speak, right? One thing I kind of equate it to a little bit is, think of loyalty points, right? Loyalty points is a form of currency, and you're increasingly able to use loyalty points from one program to buy things in other places, and it's really become more like a currency. I think you're going to see a similar path with crypto, and it's going to start with who's going to be kind of that first merchant to start accepting it for payment.
In the Bank 4.0 stuff that I've done, I talk a lot about embedded finance and embedded banking. And buy now, pay later is, obviously one of these contextual credit scenarios that we've seen emerge. You guys talk about embedded finance as well in the report.
We do.
What are some of the other applications in terms of based on like a geolocation trigger or a behavioral trigger or, some sort of context where you see mobile wallets sort of adapting in terms of these contextual or embedded finance experiences?
Yeah, what I would tell you is what's very important to us is, we have over 1 million clients who are trying to run businesses and provide more and more value to their consumers and provide greater and more delightful experiences for their consumers. Part of that journey is being able to, if you're a small business, FIS just not provide you the ability for your customers to pay for their massage or their dry cleaning or whatever the case may be. We want to be able to also offer that dry cleaner a loan, right? Maybe offer them the ability to, do payroll, and provide a lot of different capabilities that not only help them run their business, but that they probably can also offer to their customer base. So from our standpoint, integrating our services, right? Whether it be a loan or maybe replacing a card or giving out a new bank account, having, kind of friendly APIs that integrate well into software and are easily consumed by these super apps is kind of a big motivation for us.
So looking out, the report looks out to 2025, but if we could look out to 2030, a few more years, where would you say we're at in terms of things like CBDCs or mobile wallets and these types of moves in particular?
Well, I tend to think CBDC is going to happen. I think there's momentum there. I'm not the expert in the industry related to it, but I think my thesis is grounded on, hey, e-commerce continues to evolve. There's a lot of very big players in this space who are looking to solve problems. And I think governments are very open to creating kind of a digital currency that has, a bit more solid backing, so it can be more palatable to the people who are selling goods and taking it as payment. I think the one thing for me, I think, as we look 10 years out, I just think I think my company is going to be processing a lot of transactions that originate in the metaverse. I think we're going to be processing as many purchases of people on their Oculus or in kind of their digital reality world, buying Air Jordans for their avatar or a case for their virtual Apple phone.
So we won't be swiping virtual credit cards in the metaverse, right? It's going to be just digital.
No, people will be buying virtual Apple phones.
Yeah, and your wallet, so it'll be a cloud wallet. Your wallet will be something that can traverse your mobile, your voice experience at home, your in-car experience for charging your electricity, and of course in the metaverse. So, Jim, thanks for joining us. Where can people get a copy of the Global Payments Report?
Yeah, I think you go to the FIS website. I think there's, you'll see hints towards getting it, and it's a report we're really proud of, right? It's become kind of a industry reference book, and we're excited to present it out here for 2022. And
for you personally, how do you keep up with innovations happening in the payment space?
Well, I watch this podcast every week to start but I'm just kind of a big reader. I have some people I like to follow on Twitter. We have a great PR department within my organization that kind of feeds my appetite for information, but I kind of just do a lot of rummaging through information on my spare time as well.
Awesome. Well, Jim Johnson, thank you for joining us on Breaking Banks today. Jim Johnson is the President, Merchant Solutions WorldPay from FIS. Check out the Global Payments Report from FAS. It's a fantastic read and confirms a lot of what we've been talking about during the pandemic and even before in terms of wallet adoption and the changes around e-commerce and at the point of sale, particularly around contextual payments, real-time payments, and embedded finance. That's it for this segment. We'll be right back after a quick word from our sponsors. Welcome back. For this half of the show, we have a longtime friend of the show, a regular. She sat in the hosting chair many times, and that is Penny Crosman from American Banker. Penny, welcome back to Breaking Banks.
Thanks so much for having me. Great to see you. Great to be back.
Yeah, it's been a while. You guys have started your own podcast, of course, over the last couple of years. How's that been going? Because you've been sitting on the chair there hosting that, right?
Pretty well. We have two. One is called American Banker Podcast. It's a very straightforward. We interview people. And then the other one is called Bank Shot. That's hosted by John Helpman, who's now our Washington Bureau Chief. And he does more of a narrative style podcast where he comes up with basically a story idea, intercepts with interviews with different people. And it's much more of a story kind of format. So they've been doing pretty well. I think there are a core group of people who like to listen during their commute and catch up with bank and fintech topics with us. So it's a nice format.
Awesome. Yeah, I think that story sort of format is becoming more popular for podcasts. I think Serial and others sort of started it in terms of that, or This American Life, Planet Money. A lot of them have followed that. Obviously, the production values tend to be much higher and they're more expensive.
Very much so.
And a lot more planning goes into it. We're just doing one now, which you're going to hear in the next couple of weeks, hopefully, on the launch of the ECNY, the E1 wallet in China and sort of what that means. And we've brought in a ton of talent from around. We've had man on the street interviews in China. It just takes a lot more preparation. Whereas, often with these sorts of episodes, we can just sort of sit down, have a few questions and jump straight into the conversation. But those story format tend to be a much more work, but yeah, great content, obviously. So, so I wanted to, I wanted to talk with you about the Ukraine situation. Obviously, we've seen from a perspective of financial inclusion as one aspect, where we see a bunch of fintechs who've tried to make some movement in terms of lower income and giving people access to financial services. We've talked on this show, and I know you've talked about this at American Banker on new bank success with that. We Bank in Shenzhen is another example of that. But have you seen examples of any fintechs that have sort of stepped into the breach here, and figuratively speaking, in terms of helping the Ukrainian people at this time?
There have been a lot of efforts, and from the very beginning, a lot of fintechs are helping with donations to Ukrainians. I think one interesting example is Revolut, where one of the co-founders of Revolut is Ukrainian, and they have raised more than $10 million to the, I believe, the Red Cross Ukraine, and they have been matching donations to the Red Cross from their customers and people in a lot of different countries. There's a group of fintechs that are called Fintechs for Ukraine, and these are European fintechs, and they are also raising money for Save the Children's Ukraine appeal. There's a company called WhitePay that has raised about 2 million of stablecoin Tether to help Ukrainians. So there's definitely been a lot of that. But one of the things that I think is the most interesting from my point of view is a lot of fintechs actually have employees in the Ukraine. There's about 190,000 tech workers in the Ukraine. And one company is called UpSwat, and they were originally founded in Ukraine. Now their main office is in North Carolina, but they still have 40 employees in Ukraine, and they tried to evacuate as many people as they could. You know, that the CEO Dmitry Narenko like talked with each one and said, you know, can you evacuate? We'll help you. The company has spent hundreds of thousands of dollars evacuating people out of Ukraine and mostly into the country of Georgia, where they're actually all living in the same apartment complex. But for the ones who have stayed, it's been kind of, you know, heartbreaking because, you know, some of them are staying because they have elderly parents. Some have elderly pets. Some want to stay and fight. And, you know, some waited too long because, you know, men between 18 and 60 can't leave now. So they may just be working there, but they are there for the interim. So, you know, that's really been the most challenging thing for these fintechs. But in the case of UpSwat, in the case of many of these fintechs, they are raising money, and also a lot of these fintechs have made payments to Ukrainian banks free. So if people want to donate or help relatives or help friends, they don't have to pay any sort of transfer fee. So Revolut did that. Also, Wise and Remitly have done that.
Yeah, I saw that.
Santander Bank as well did that. So I would say there's a fair amount of collective, you know, effort to try to do what you can. Of course, we're limited in how much anybody can do, unless you're gonna, you know, unless you're an Army veteran and you're gonna volunteer to go fight. You know, the rest of us are kind of sending money and prayers and.
Yeah.
You know,
I saw an interesting, you know, there's an interesting trend in terms of Airbnb and Etsy. I've seen people booking Airbnb properties in Ukraine and buying items on Etsy, but doing so with no expectation that obviously they're going to go and stay there. But that's their sort of tried and true mechanisms. People that rented their places and, you know, were you know, makers on Etsy and so forth, they have already access to those platforms to get money through. So that's how some people have sort of got their donations into the country through those mechanisms, which is sort of an interesting adaptation of those existing channels. I did. I was reached out to by. I'm probably going to mess this up. You know what I'm like with names, but Rostislav Diuk, who is the chairman of the board of the Ukrainian Association of Fintech and Innovation Companies. So this is fintechua.org. And he was asking fintech and foreign brands to, you know, amplify the message basically to brands working in Russia to please, you know, stop supporting the Russian economy. So, you know, I guess, you know, the Fintech Association as a whole there, obviously this is a pretty interesting time. How do you sort of adapt to this? You know, we know that there's a huge developer community in the Ukraine, as you said, that, you know, has been supporting fintechs around the world. You know, prior to this, I think I was probably getting 2 or 3 outsourcing offers a week from Ukrainian companies pitching to me through either through LinkedIn or via you know, email to Movin in particular, because, you know, obviously Movin uses outsourced resources from time to time. Ironically, we were introduced to a group of Ukrainian technologists that we've used from time to time for Movin. We were introduced to them through Sberbank, through our Russian investors. And so, you know, it seems ironic now.
That does seem ironic.
Yeah. But functionally, you know, where do you think, obviously in terms of getting donations into the country and so forth, there's elements there, but, you know, what else do you think fintechs could do apart from just sort of channeling donations into the country?
Well, as you mentioned, some have begun refusing to work in Russia. There are a number of fintechs and fintech payment companies, especially, that are supporting the sanctions on Russia and the refusing to do business in Russia. And I mean, also sort of ironically, I'm sure you read that Visa, MasterCard's bans in Russia kind of backfired because the local Russian payment processor continued to function. So it was really the journalists and anti-war people trying to leave Russia who were affected by that. So they left the country and then their cards wouldn't work. So that, and I think we'll see more of that kind of backfiring of sanctions. But, another thing, as you said, is just continuing to support those who are willing to keep working. A lot of programmers are still working in the major cities, and so fintechs are paying them and paying taxes to the country, and in some cases, like in UpSquat's case, it's given extra cash to those employees, and trying to Revolut has given its employees an app that helps them understand what's happening and where they might go to be safe. So, just kind of supporting those people who are, bravely staying and continuing to work, I think is one thing. And I guess, helping the refugees to kind of pull their lives back together might be a way that fintechs can help. I know some of the payment companies are trying to help Ukrainians make sure they get access to their funds and can, pay for things that they need to pay for. And
no, that's a good point. I hadn't thought of some of that, but it's key. It's interesting to see Russia's response to the MasterCard and Visa sanctions, particularly the now adoption of UnionPay in that economy. So as of 3 days ago, Roslhozbank, Pochta Bank, Bank St. Petersburg, Promsvyazbank, Russia Regional Development Bank, Primsotsbank, Zenit, Sovcombank, and others have already begun issuing cards on the UnionPay network. The Russian Central Bank said it planned to issue cards using, or many of their member banks plan to issue cards using UnionPay. I know, as you know, I spend half of my time out of our residence in Thailand, working in Asia. And I know there's a lot of Russian expats in countries like Thailand that suddenly were left without access to cash. So issuing them a new card with a UnionPay, chip seems to be, one way the Russian banks are responding to the sanctions. I don't think there's anything that fintechs could necessarily do to prevent that from sort of taking off. But there is some very real pressure on China in respect to this. But from China's perspective, what have they got to lose? UnionPay, we've got incredible progress that's been made with UnionPay, particularly UnionPay 2.0, where with the inclusion of Alipay and Tencent WeChat Pay on those rails, now from a pure transaction perspective, more transactions go through UnionPay in respect to mobile wallets than all of the rest of the plastic card ecosystem or card schemes globally. 52 trillion in 2020, right? Through Alipay and WeChat Pay alone. And, plastic cards through all the other card schemes, about 36 trillion. So I guess China's, if they want to have a dominant, payment rails network for at least for card transactions and mobile wallets, they're going to not turn away Russian business necessarily. But, are you hearing any banks in the US talk about China's involvement from the payment rails perspective?
I have not heard US banks talk about that. I think US banks are pretty cautious about commenting on on this sort of thing. I know that, you know, the US banks are very, very concerned about sanctions and trying to get the sanctions rules right, because the rules of
Yeah.
the lists keep changing, and the rules, you know, what exactly they have to do. And they know they can get penalized if they get something wrong. And of course, the so many of the sanctioned entities are sort of this like Russian doll
Matryoshka
situation
doll.
with shell companies within shell companies within shell companies. So it's very difficult for the banks to keep up with that. I know there was some talk with the SWIFT blockage that, you know, Russian banks can work with banks in China and move payments that way. So it does seem like overall, you know, we always feel like US and its counterparties dominate the world of finance, but it does seem more and more like China has a growing role, and the US sanctions are not as, you know, quite as powerful as they once were. So but as far as banks being concerned about China, it's yeah, it's just a lot of banks just try to continue to you know, work in cooperation with banks in China. I don't think that that's something they're reconsidering at the moment.
It's interesting when I look at like the sanctions. Obviously, the ruble is been dramatically affected, but the $630 billion war chest that's spoken of that Russia stockpiled before invading Ukraine. A lot of, and it was 370 billion 7 years ago. So that indicates the focus that has been put on foreign holdings and gold. But a lot of those are offshore. Yeah, those foreign holdings are offshore. So getting access to that is a challenge. The central bank, well, the ruble lost half its value against the US dollar after Russia annexed Crimea, and that cost the Russian central bank 130 billion to stabilize the currency then. So I don't even know if it's possible for them to stabilize the currency right now. But 13% of its reserves are held in Chinese yuan. So at least we know now that it would appear that some of those funds are accessible. But it'll be interesting to sort of see how this develops. I think one of the challenges would be, you know, if you're a startup founder, you know, it's tough enough to run a startup in fintech these days, let alone being in a war-torn country or even remotely. But the working from home culture that we built during the pandemic, maybe, do you think it will help some of these fintechs to sort of continue to operate despite the fact that, you know, what's going on?
Oh, definitely. It definitely has. And in the companies that I did speak to that have some Ukrainian employees, that's definitely how they've rolled. They've Revolut closed its office in Cherkasy, and as I said, 40 UpSWAT employees were moved from Kiev into the country of Georgia. So basically, they just had to replace any equipment that people weren't able to bring. But as long as they had Wi-Fi access, being able to have applications and work in the cloud, really helped the people who did evacuate, early to restart their lives, pick up again, start working again, pay their rents, get their lives to some sort of normalcy again. So, and that's part of, I think, the event of the cloud and remote working, I think, is also part of why Ukraine has been such a hotbed for tech workers, because they can work anywhere in the world from Ukrainian cities. So, they were sort of almost an outsourcing post.
Exactly.
Because of that. So
did you see, because internet obviously has been impacted in Ukraine, telecommunications infrastructure, obviously power infrastructure has been attacked and so forth. But did you see what SpaceX had done in respect to Starlink? for Ukraine?
I saw a little bit of it.
So, Starlink is this internet satellite constellation that SpaceX has been building over the last few years. They now account for about a quarter of all satellites in the night sky are Starlink, internet satellites. And so they shipped a whole bunch of these Starlink terminals or satellite dishes, to Ukraine. I've seen at least 3 shipments that have gone in. And these things can be powered actually from a cigarette lighter in a car to a 240 volt power outlet, and of course 110, and enabling people to continue to get access to the internet through this satellite internet connection. So even that is fairly new technology. It's still technically in beta, but we seem to see the world rallying around this. I can't imagine the pressure that's on Putin to pull back from this, and then what loss of face that might mean for him politically and so forth. Obviously, I'm not a geopolitical guy. I have been watching Ian Bremmer. I don't know if you know of him, but
I saw one segment he did. Yes.
Yeah.
It's very interesting.
Really, Ian's a great analyst, in terms of sort of the whole geopolitical situation. He's based here in New York, of course. So, if you want to sort of get a picture of what this all means for Putin, he's got a really good take on that. But, where do you think this takes us in a few years' time? Do you think that this potentially, with China and Russia partnering more in respect to this, do you see this creating more direct competition for networks like SWIFT, MasterCard and Visa, in terms of global payments and global infrastructure?
Yeah, I mean, of course, my best case scenario is that Putin or the Russians are somehow forced or incented to pull out of Ukraine, and there's peace in that country again. I mean, I would just love to see that, but a lot of people, I think including Ian, do think that this could go on, this could just drag on for years, and with the Russians just pounding Ukraine and Ukrainian fighters and civilians resisting, and some of the videos of civilians marching up to Russian soldiers carrying these giant rifles have just been amazing. The courage of these people has just been so astonishing. But there is a worst case scenario in which Russia and its apparent ally China become more powerful. They do manage to achieve their goal. Russia's talking about seizing Western assets of companies that are pausing their businesses in the country. And they're sort of, I think they're going to try to retaliate against the sanctions that the US and other Western governments have imposed, and they're going to try to pay their debt in rubles. So I think the worst case is, Russia and China continue to kind of fight back with their own sort of economic, their own form of economic warfare and their own sort of ideal of trying to replace what they call the liberal, democratic society that the US and many countries try to promote and try to get more and more
independence from the rest of the system. Yeah.
Well, and just more and more power over more and more countries, and take over Taiwan and take over territories that they consider their own.
Yes.
And build their sort of anti-democratic type of communities, types of government, and types of financial systems. So I hope all that doesn't happen. I hope we can fight it, but I think it's a possibility.
Well, Russia and China have been working on their own independent ecosystems for some time, particularly for trade. We know that a lot of trade had already shifted to euros, away from petrodollars, for example, in terms of commodities trade. There's more foreign reserves being held in other currencies, as we talked about earlier. So, China China's got to be thinking about this as a dry run for Taiwan. Everyone's talking about that, and their independence in terms of their own systems, and trading on the Belt and Road. Richard Turin, who I know you're familiar with, has talked a lot about the potential for the new yuan, ECNY, to be used as a wallet or mechanism in the future on the Belt and Road for trade, giving them independence from the SWIFT system and so forth. So, I mean, you could see a bifurcation of the system as a result of these trends. And, as you say, it depends how long they stay in there, right? If it goes on for many years.
The wild card is cryptocurrency. Can governments like the US impose constrictions on cryptocurrency and make them make cryptocurrency exchanges and so forth observe our sanctions? Or will cryptocurrency companies, support many different players and become more of a mechanism for payments and business that goes outside of any sort of government restrictions?
It was built for that decentralized purpose, wasn't it? To circumvent the central bank system. There is evidence, given that crypto's up from its dip, over the last couple of months. There seemed to be some evidence supporting that. Well, listen, Penny, it's great to have you on the show. Thanks for giving us your update. What are you working on at the moment that we should be watching over at American Banker?
Well, this is not a happy story, but I'm currently working on a story about a fintech that supports puppy mill loans. It actually makes puppy mill loans, and how this is dragging its bank partner down. Its bank partner did not realize that this was one of the types of loans it was supporting. And so actually they're sort of rethinking this now, and the bank may back away and stop allowing at least that kind of loan, if not all the loans that this fintech is making. But personally, I would like to see more of a crackdown on puppy mills and puppy mill loans. So it's something I hope people will start to recognize that this is a problem that needs to.
Oh, we'll have to check it out. Yeah, there's definitely, I think we should be like there's this, we talk about ESG, but ethical banking and transparent banking in respect to this. We know that like cannabis businesses, for example, have had trouble getting banks to support them, even though it's being decriminalized federally now. So it'll be interesting to sort of see how this sort of ethical considerations behind banking, especially as climate change starts to bite, sort of reframes the way banks think about the business they're doing. So, but Penny, thanks for joining us, and we'll be sure to have you back on the show very soon.
Sure. Thanks so much, Brett. Take care.
Thanks all. That's it for Breaking Banks this week. We'll see you again next week. That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.